Hello everybody, welcome to TraderMerlin Show for your Monday edition. I don't even know what day it is anymore. I believe we're on December 13th. Oh boy, been one of those days. Hope you all doing well. Good to see you, Thomasina, Chris, Ellen. I think we see some new people in here today. Margaret as well. We've got Mario, Les Gold, Big Ab, Giselle, Katut, Vasily. We'll get to your Kraft Heinz question a little bit later on. David as well as Les Gold. Good to see the regulars out there. And for those who might be new, hit that subscribe button and we'll let you know about how to give thumbs up later on if you like it or not. All right, again, here's my email for those who want to send in questions about show topics. You can send in at TraderMerlin@gmail.com. That's the easiest way to send questions on in, and usually that ends up being pieces for the show, as it is today. So today's topic, and hello, Shinobi, good to see you, as well as John. The question, we talked about this a little bit on Friday when I kind of went more of a macro view of markets and kind of all the pieces and dominoes that are falling into place. And for those of you who have not seen it, Online Trading Academy asked me to put together a little video on the potential inflation issues and kind of what we should be thinking about it. Whether that's fearful or optimistic, look, it's opportunity either way. So the big next question is what's going to happen over these next 3 days. So I brought this picture of Jerome Powell looking all, I don't know, stoic, solemn. Who knows what that look is for Mr. Powell. But really it's these next 3 days. And we're less than that now. As I was building out the show for today, I thought about the whole 3 days. We're less than that now. We're kind of getting down to the next 2 days. But bottom line is there is a lot of volatility going to happen. I think that you'll probably see some very high volume days as people are trying to anticipate or information potentially leaking, because this is probably the most important Fed meeting of the year, if not the last few years. So I'm going to go through a question that came in from a listener to kind of set the stage. And then I'll quickly talk about that, what's going to happen over the next 3 days, at least what I think will happen. And then I got a bunch of listener questions coming in on different things. So I will try to get to all that as we progress. So to give props to viewers of the show, this is from Jason. He sent this one into TraderMerlin@gmail.com. He says, a cyclical pattern that I've observed between the Fed and the market for the last 5 years has been, number one, markets fall. Number two, Fed makes some announcement to calm the markets or perform some QE. Number three, market recovers again, rinse and repeat. My question is, what can cause this strategy to stop working so markets can no longer be artificially pumped? It's actually a pretty easy question. It's kind of like a shoplifter. And I use this analogy when I talk about investment bankers and things like that. But if I walked into a grocery store and I see a Snickers bar that I want and I don't have any money or I just don't want to pay for it, and I steal it and nothing happens, I'm going to go back in and do it. I might even steal 2 or 3 candy bars depending on how it's set up. If I don't get caught, then what's the point? Why I bring that example up here is you have to ask yourself, has the Fed been caught? Right? Has any of the actions that they've done, from the unbelievable quantitative easing they started back in 2009, right? So you had QE1, QE2, QE3, Operation Twist, just name it, it just goes on and on and on. None of those came back to bite them. None of those came back and just literally threw a sucker punch into Powell's face or Yellen's face and knocked him out. So they'll keep doing that, exactly what you said, the cyclical pattern, which has been markets will sell off, the Fed steps in, comes riding in on the white horse, here to save the day, until something happens that prevents them from doing that. So you mentioned in point number 3 here of your list is market recovers again, rinse and repeat. Great. At some point when you do this quantitative easing over and over again, it will work until it doesn't, right? Everything works until it doesn't. Is this a confession? So what's going to stop that? You said, what can cause the strategy to stop working so markets can no longer be artificially pumped? Every time that they've injected massive amounts of capital into the system, whether that's buying tons of mortgage-backed securities or treasuries to prop up the yield curves and the housing market, or whether that's just, you could call it just stimulus from our government, or whether that is creation of N1 money supply to further stimulate the economy, all of those actions have not been met with any recourse. Now all of a sudden we're seeing some examples of how that's hurting us, right? Number one, we're starting to see economic data slow down. We start to see GDP numbers sell off. You start to see retail sales numbers slow down. Then all of a sudden that leads to further unemployment. Now, granted, unemployment's great. Unemployment numbers look really good right now, but some of the other data isn't as strong as it should be for having pumped in nearly $17 trillion in less than 2 years. Now, The other side of this is the inflation aspect, which of course is what's on everyone's mind. We saw a 6.8% inflation reading on Friday with the CPI numbers. Tomorrow you have a PPI number come out, and that'll tell us kind of how the producers are faring in all this. Because obviously the consumer's one is paying the end price for products, but if producers are making them and their prices are rising quicker than the consumer's prices are rising, then that increase will pass on in the next CPI number. So it's this giant domino effect. But to answer your question is, it's been working, your step 1 and 2, which is markets fall and then Fed steps in. They can't do it anymore because what's the Fed's going to do if the markets start to fall? They can't jump in and start printing more money. They can't do a quantitative easing type of thing because that would further exacerbate inflation, which is more of a threat than a weak economy. Super high inflation could crush an economy. So they're stuck between that rock and a hard place. Now, the expectation is that Mr. Powell on Wednesday's meeting is going to talk about tapering. And the question is there going to be quicker tapering? Remember, he's talked about a $10 billion taper for treasuries and a $5 billion taper for mortgage-backed securities per month until the middle of next year, which, okay, fine, that's great. But because this is happening so quickly and inflation's jumped, remember, we went month over month from 6.2 to 6.8%. That's a 0.6% increase in a very short window of time, in a month. That, to me, is showing great acceleration. So that means they may have to actually step up their tapering to help calm inflation. So if they go from $10 billion a month of treasuries of tapering to maybe 20, well, what's that going to do to the market? If they unload $20 billion or stop buying $20 billion worth of short-term treasuries, the short end of the yield curve is going to go where? It's going to go up because you no longer have buyers. The main buyer has been the Fed, and they're not going to buy as much. Matter of fact, they're scaling it back. You're going to see that short end of the yield curve start to rise real quick. Now, what's interesting is the long end of the yield curve has actually been drifting down a little bit, and if we pop that up, we might see a situation where the 2 and the 10 become inverted again, which is one of the most reliable signs of a recession and trouble ahead for the market. Now, we're not there yet, right? That's just pure conjecture and speculation. So wait, was America great again or not? I think we can, I don't know, we all differ on opinions, and again, this polarizes people and makes it Democratic or Republican. I don't care. It's none of those to me. Is America great? Yes, America's great. Could it be better? It can always be better. It's not like it was in shambles and trash, right? We've always been, not always, but at least I feel we've always been great. And, hopefully we'll continue to lead. But that's not the discussion. The discussion is, what do you got to do to keep this economy going, right? And if they don't have that stimulus, which they've been using recklessly for the past 12 years, well, then all of a sudden you have to find other ways to stimulate the market. My guess is you'll hear John O'Donnell has talked about, as well as some of the Austrian economics guys who have been on the program, not this program, but on Power Trading Radio, right? When John used to bring on all of his Keynesian or Austrian guys, they'd all say the same thing here. The markets need to discover price for themselves as opposed to being artificially manipulated. Now, what does that mean? Well, I posted in the Monday Morning Must-Knows, which some of you may have checked out. If you didn't, I might want to check that one out. I make this point here, which if you look at the monthly of the S&P 500, one of these kids is not like the other. I mean, this is a just unbelievably massive rally to the upside. There you go. Woohoo, Jay. We like when you hit the like button. So, I think everyone that watches this knows at some point this is going to come crashing down. Just the question is when. I don't think it's going to happen on Wednesday, but I do think you're going to see a lot of volatility. Now, let's look at the S&P here for a second and put it into perspective, because I got a couple emails which I didn't put in here in the chat or in my presentation, just because I will address it right now. You look at this market and people are freaking out that this market's falling apart. Is it? This is not falling apart, guys. There's no way you could look at this price chart of the S&P and say it's over, right? Are we topping out? Sure. Maybe we put a line across here somewhere, and this will be subjective. I'll put a range, because some people like to go to the very tip of the tails, others like to go to the bodies. We can already start to classify that as a zone where it has not been able to break above that. So, I don't think that this is anywhere showing of a debacle or a meltdown. But we do see increased volatility. I mean, notice some of these candles that we saw back in August and September, very small range days. All of a sudden, we're seeing very expanded range days. So I think that this is great for those of us who are shorter term. For the long term ones, you're still long, right? There's your S&P. There's your Dow, right? Still looking good. The only real negative here for the Dow is this latest break. It didn't make a new high. Okay, so what? As long as it doesn't start making new lows, your bias should still be long. So who cares? If you've been trading for 3 to 5 years, it's falling apart. I disagree, Jay. Check this out. If you've been trading, let's go. So I'll just show you 5 years, right? So there's this is 5 years of the S&P 500. That is not falling apart, right? So I think when you say falling apart, it means maybe not normal. This is clearly not normal. Absolutely not. And you know, this is kind of what scares me, is because you have so many new investors, these Robinhood traders, and you know, people who've just come into the financial markets. All they know is this bull market. Except for the sell-off that happened in February of 2020, which I'll show you, they don't really know what a down market is. Right? This was a great trigger. I actually thought we were going to double dip, which is what my big bet was, and I lost obviously on that one. But still, as the markets move up, I'll make trades accordingly. You know, is it broken? No. I know, Jay. I know. I know you're on my side. I know. Yeah, so this is definitely not broken. But when it falls, when you have something that, to me, this just shifted gears, right? And what do I mean by shifted gears? Let me go to a weekly here, and I will explain what I mean by shifted gears. Notice the trajectory. So I'll do 3 of the most recent big market moves, right? So let's go trend line from the lows of, let's call it 2003 to where we saw in 2008. You guys see that's this diagonal red line I'm drawing. Now that's first gear. I mean, there's second gear. Notice that the angle is significantly steeper, and then now we have this one right here. Okay, this is what happens when you pump in so much money in the markets. You know, if this market cratered and sold off another 50% or had a more normal trajectory, I'd feel comfortable. To me, this market, if it was moving up, even if it did something like this, I'm okay with that. But this is just way too far to the upside here. So, you know, again, we have to wait and see what happens with Powell. And I called it the next 3 days just because it has an ominous tune. If you saw the horrible movie, I believe there was a movie called The Next 3 Days, which was pretty bad. But anyway, I wanted to put it up there to be a little bit dramatic because, you know, it is about the next 3 days. And really, I think there's just going to be a lot of people speculating on, will he taper? Will he increase taper? Will he make statements about inflation? And will he be more definitive about rate increases going forward? Yeah. Well, John, even if we look at the bending portion, and I agree, I love you're right. We're certainly not broken, but is that bending? I mean, it just looks like, oops, sorry, I'm looking at myself. That just looks like an uptrend to me, man. It looks great. So, you know, to me, it's right about, it's saying what's going to happen right now. Right? We're currently at 46.6350 on the S&P futures, and you look at that top line, which I'll put right there, which is 47.43. So we're 80 points off the all-time high on the S&P, roughly 80 points off the all-time high. And, you know, this doesn't look bad at all. Until proven wrong, stay long. Shinobi says markets are designed to go up. They absolutely are. And some more so than others, right? If you look at things like the Dow Jones Industrial Average, you've got 30 components, and they're constantly replacing those. S&P and NASDAQ are also replacing their components, just like a football team or a baseball team will get rid of players who are underperforming and try to find someone better. Well, that's the same thing the markets do. So yes, they're absolutely designed to go up. But they're designed to go up under normal market conditions. I definitely would contend that we have an unbelievably manipulated market. So what? It is what it is. Nothing I can do about it other than try to trade it and make the best financial decisions I can with it. All right, what do I got? Consolidation in supply zone should break above. Agreed. Statistically, when you have, you know, a ceiling like this, so called a supply zone, and it's hit it a few times, had an aggressive sell-off, which went a little further than I thought it would, and then now it's challenging that high again, statistically, it should actually break to the upside, simply because a trend usually continues in the direction, or a trend usually continues in its most dominant direction, which is up in this case. So I agree with you. I think you got to be real careful this week because any comment by Powell or central bankers can throw this market reeling. Now, that's the S&P. You know, you've got the Dow Jones Industrial Average, right? We looked at that one. Still trending up, although not as strong as it was back last year. You have the NASDAQ, which has been pretty choppy lately. Tech is really kind of getting a lot more attention, certainly with Apple and Tesla. Congrats to Mr. Musk for Man of the Year, or Person of the Year now. We have to be politically correct. Sorry about that. And then here's the week one. Right, here's your Russell 2000. I'm anxiously watching the Russell because I have IWM puts that expire on Friday at 2:09. So a little nervous about that one. I may get executed the way this thing's been falling. But this is the only one that really is not following that strong upward trajectory, right? Again, I know, Tom, you were doing some iron condors on this one. I hope it's back in play for you because it feels like it's just back on that yellow box. One week or 2 weeks out of that, and all of a sudden we're back in. Let's see. Maybe a retest of 3,400 or 3,500 on the S&P. Why not? Let's check that out. Yeah, I've got a few lines on here, and I think part of this is if we get all the way down here to 37, so 3,800 is 20% off the all-time high. Okay, 3,700 is 20% off the all-time high, and that would be a pretty notable one. This is what, again, you guys may know the story, but this is what got me kicked off of CNBC. I basically said if we break 1260 on the S&P 500, break out the bulldozers, we're going down in a big way. I think the same thing's going to happen here. If we get it below 38, which of course is eons away, it's 800 points away, so we got plenty of time. But if it does get there, I think you're going to see this thing just crap the bed and a real market sell-off. You know, does that mean it brings us all the way back down to the 2020 lows? Yeah, I think so. I know it sounds crazy, but remember, it's not like we've been just artificially propped up since these lows here at 2,200. We've been propped up since these lows back here at 666, right? I mean, that's just to put that in perspective for a lot of people who might not be long-term in the markets, meaning that they may have started over the past few years. Uh-oh. Hello. My chart just disappeared on me. Let me go back to that S&P. Okay. Not sure what happened there. Oh, there we go. It was hiding off to the right-hand side. You know, to me, it puts it in perspective. People think that it's just this last move. We were already in a monstrous bull market, even without all the COVID stimulus that's going on. So, anyway, just throwing that out there. And for the gentleman who sent in that question, I'm glad you did. Thank you for sending that one. That was for Jason. And again, your question about what can cause it to stop working, it's when the data is more dangerous if you continue to do what you're doing. So if the Fed continues to jump in and do QE and all kinds of money printing, that's going to create an even bigger problem because inflation gets out of control. And again, you could check out the video I did for Online Trading Academy. I think I actually tweeted it out. So if you guys are on Twitter, I'm at TraderMerlin. I'm pretty much at TraderMerlin on every social media platform. Oh, and as a cautionary note, it's at TraderMerlin. Nothing else. No dashes, no underscores, nothing else. There are so many scammers out there, and just so that everybody knows that might be watching this program, you will you will never see me send you a message directly and say, hey, how's your trading going? Can I help you with your investments? That's not going to happen. And, oh, Rhonda, you want to shill porn on this site. Beat it. I hate when people do that. Let's see, hide user, and then we'll block her, and we will remove Rhonda. Shilling her damn X-rated stuff for you guys. Gone. Let me delete that so there might be no youngsters, and remove. Okay, there we go. Sorry. You're saying the Fed has been buying nonstop since 2009? Yeah. Actually, no. I'm wrong on that. It hasn't been nonstop. There was a period where they slowed down, right, and they were starting to unwind their balance sheets. That was 2015, right? So 2015, they started to unwind the balance sheet. They were unwinding it, meaning they were no longer making purchases, and then all of a sudden they jumped back on the trend. Let me see if I can. Let me see if I can real quickly find it here. Fed balance sheet, I think is where it was. Doing this stuff live is always a tough one. Let's go images, because you can see it rolling over, and then all of a sudden it spikes back up. No, it says to present, but it doesn't show me the dates. Unfortunately, I can't do it live for you. I really want to, but I can't show you live right now because it doesn't give me all the data. Okay, here we go. I mean, this is somewhat clear. I know it's hard to see, but you notice here that back in 2009, they bought, and then they were buying much more, QE, and then right here in 2000, actually it looks like it was later than that, their balance sheet started to decline starting in 2018. So they were unwinding their balance sheet a little bit, and then all of a sudden COVID hit, and we're off. We are so far off to the races. You know what's funny is, if you look at this chart right here, you know, you see over here that the amount of where the assets were at, it's so much bigger than this. And it's like they forecasted it like, oh yeah, it should stop right around 9 trillion. Yeah, keep going, buddy. Nice guesstimate. Shouldn't gold and silver be rallying in times of uncertainty or the Fed raising interest rates? It should. which is one of those pieces that's kind of a little wild card here. And again, I'm in full disclosure, I am long silver. I have a ton of SLV right now based off of that. And I think long term it'll pay off for me, because ultimately what will happen is the dollar is going to spike. And I think when the dollar spikes, because again, domino effect, right? You have rising rates. And why do you have rising rates? You have, it almost sounds like I'm saying it wrong. You have rates rising because the Fed is no longer buying all these bonds and keeping the rates low. So if buyers disappear and no longer buy the treasuries or longer term debt like the 10, the 30, etc., then what happens is they have to they offer a higher rate of return to attract money. So those rates rise. The other piece here is the dollar is going to rise. And I'm not saying it should rise. The dollar is going to rise because they're removing money supply. Remember, they've increased almost $17 trillion in the last 2 years. Some of that needs to get put back where it came from. So if we start to reduce money supply, yeah, Fed needs a bigger chart. Exponentially bigger, John. If the Fed removes money from supply, then you have the same amount of people chasing fewer dollars. Prices of the dollar is going to go up. So all of a sudden, dollars go up more. And in theory, there's usually that inflationary hedge, meaning gold and silver should do really well. However, remember, gold and silver and other commodities are priced in US dollars. So what happens if the dollar starts to spike too much, the foreigners, whose currencies have been dropping against the dollar, can buy less dollars, which means they can in turn buy less gold and silver or oil, right? So there's this interesting chess game going on right there with the dollar, but right now the assumption and historical assumption has been that gold and silver should be good inflation hedges. They're just not proving that right now. I can show you charts here. Let's look at GLD. Actually, I'll look at gold futures, which are slightly up today. That's not exactly the best looking monthly chart. It's actually a bullish flag pattern, but to me, just a slow drift down. We can look at something like SLV, right? Silver, that's looking kind of weak right now, but I still think long time will be good. Hey, Merlin, do you see the video of the congressman or senator? I don't know. Schooling Powell? No, I didn't. I try not to watch the political stuff, honestly. To me, it's almost like bad reality TV. Reality TV show, and I'm talking The Bachelor, Survivor, all that crap, Desperate Housewives, that garbage that destroys your mind with absolutely fictitious ways about how life is supposed to function. That stuff is trash. I don't watch it. Politics is almost as bad, right? It's scripted drama. It's making up issues. So I try not to watch it, but I know that I have seen some clips of different ones. I'm not sure which one, Shinobi, but yes, I have watched a little bit of it, because a little bit of politicians getting schooled by different people, but I don't know. What happens when you print and telling Jerome Powell? Jerome knows. See, again, Jerome Powell doesn't mind printing all this money because he'll be gone when it all comes home and comes crashing down. You're printing too much, Mr. Powell. Oh, how about you just stop? Oh, yeah, I did see that one. That was the congressional test. That was recently. That was, I think that might have been the previous Open Market Committee meeting. All right. Hey, OG Jinbling. All right, so that was it. I don't want to spend too much time on Jason's question, because I think on Friday we did a lot of that. We talked kind of the macro picture, but boy, I'm excited for this week. I'm actually scaling back a lot of my trades. I'm going to probably go a lot lighter. Again, I have some pretty decent sized positions in options selling puts that should expire this Friday. Worthless. What am I in? I'm in. I can't get my list. XLF, IWM, and SLV. I'm out of. So those are my two big positions right now, but kind of lighter than I normally would be. This meeting, I think, is going to create a lot of volatility. And one of the most exciting things, which we will talk about on Wednesday, or actually Tuesday, will be the actual rate announcement on Wednesday. Do you see any short squeezes happening after Jay Powell speaking? I don't see any short squeezes. It's a good question. So a short squeeze means you've got a preponderance of people who are already in the market short, and then something happens and it squeezes them out. He would have to say something so colossally positive and from left field that it catches everybody by surprise. What I mean by that is this. Let's say Jerome Powell is at the FOMC meeting on Wednesday, and right now it's an irrefutable fact that inflation is surging. It's not trending up, it's surging. It's spiking to the upside. So what's he going to do? Is he going to say, guys, according to our metrics, inflation, we have a couple measurements in place that will end inflation by February of next year? Yeah, okay, market's going to skyrocket off that. But we all know it's bullshit. There's nothing you can do to stop inflation from rising, personally, especially to end it right away. It will take a slow rollover if it does slow down at all right now. I think we're right. The train's going to keep on rolling for a little bit. So, I mean, you tell me. And everybody type in the chat, what do you think that Powell can say that would cause this market to surge to the upside? I mean, and that's the only thing that I could see squeezing out a short squeeze for the markets. He could say something like, we're going to go to negative rates, which would be a huge stimulus for the market, right? Negative rates, you're basically telling anybody who's saving, don't keep your money in a bank account because you're going to lose money. Or it's literally banks will make money by borrowing from the Fed. If that happens, yeah, markets will surge, but then you got to realize that's going to make inflation go to 10, 12, 13% in a couple years if we do that. So they can't do it. Margaret, you get the prize. I love it. Yeah, RJ, you guys both got it. I resign, I quit. You guys are good. That could potentially cause the market to spike. But then again, remember, markets hate uncertainty, and the markets know what Powell's going to do. They know him. They've had him for years. They'll know exactly. If he says, I quit, the market now will probably freak out because they have to readjust to somebody else, right? He could say that he bought calls. OG, I like that. That's good. But that would also be against the mandate. Like, he's not allowed to do anything like that. So I'm pretty sure that would never happen. But that would be funny if he's like, we know inflation is out of control, and just so everybody knows, I bought 5,000 call options on the S&P for $5,000. That would be great. That would be really, really funny. You guys are good. How do you expect the rate announcement will affect the crypto market? Let me get to that in a second. I'll talk about crypto here in just a minute. What time we got? Oh, man, I got to get going. I read an article about how hash rates reaching all-time highs. How does that? Okay, we still got more crypto. So I'll get to crypto in just a sec. Merging with Canada. All right. Hey, at least we'd have a Bitcoin ETF now, right? Bitcoin ETF, a physical-backed Bitcoin ETF in Canada. Pretty embarrassing the U.S. wasn't first to that one. All right, so let me go here. I had, so actually the next question was from David. And here's David's question. Oops, over there. David says, what is going on with crypto? Falling out of grace. You know, this is just a cyclical pattern. You know, I actually think we're going to continue down lower. 4,200 is my target for Bitcoin. You know, am I bummed that I didn't get out of all my crypto up at the top? Of course, yeah, sure. But, you know, I'm a long-term holder here. So I did get out of some. I rebought back in at lower prices, so I'm happy with that. I'm obviously down on some of those, but nowhere near what I would be down if I was holding the whole time. So I definitely think we're going to see more downside movement. There's all of a sudden a negative error on crypto, which is no big deal. It's happened many times. You know, here's Bitcoin down 6% again today, although it's having a nice bounce right now. Let me go to their daily. All right, so, you know, the trend is your friend, and I'm playing that short-term trend. I think 42,000, which is this lower blue line here, I think that's where you're headed. I think you'll head down to those levels, and a lot of these have given back. You know, some of these are down over 50%. Polkadot, which is one that I'm a big fan of, it's down 50%. And it's actually right in an area where I'm probably going to buy some more because I'm looking at this long-term and looking at the prospects for all these auctions and parachain auctions and burning and staking, and just Polkadot seems to me to be a good one. But, you know, now it's buying opportunity. I look at a lot of this as buying opportunities. Things like, what do we have in here? You know, one of my recent ones, I bought some Render, which was up 35% yesterday. Now it's down 15 today. You know, this is another one I'm thinking long term. Sand, which I did not get into. My order is at $4.50 right now to buy in, so I haven't gotten hit yet. 42,000. 42,000, not 4,200. I don't think that's going to go down there. You know, if you look at the longer term here for Bitcoin, you know, could it get down to 4,200? In theory, yes, but I think there's too much institutional demand. I was watching an interview with Joe Lupin, who's one of the founders of Ethereum. Of course, it seems like there's like 10,000 different founders of Ethereum, but he was talking about, Dan Roberts was interviewing him and says, you know, where are we in the lifespan of crypto? Because it seems like it's been retail driven, and the change has happened in really since last year. I would say in August of last year is when institutions finally said, we need to get into this space. And you can look at the impact, right? This spike you had here in Bitcoin back in late 2008 and all of crypto for that matter, To me, that's institutions getting in. So do you think institutions are going to jump ship? No. A lot of these guys are holding on their balance sheet. So I think you'll hit 42,000. 30,000 is kind of the dead low I think we'll get to in this cycle, but it's all cycles, and I think it'll... No, Rick, 42,000. 42,000. Definitely not 4,200. Look, I'll tell you this. If Bitcoin, and I'll make you a promise right now, if Bitcoin gets to $4,200, I will pull out a mortgage against my home, and I'll buy $1 million of Bitcoin, $1 million worth of Bitcoin myself at $4,200, and I'll show you the transaction when that happens. I'll print it. I'll just post it. Like, I'm in, bought the dip. It's a big dip, but I bought it. It's not getting down there. There's just too much institutional involvement right now, and I think it's going to start happening more where institutions put on their balance sheet. So yeah, there's no way 4,200. 42,000. There you go. Let's see. January's Cardano month, so getting some more of that. Yeah, I'm a little nervous on it. Shinobi, it's a good point, but you look at Cardano's chart. It's just looking ugly, It just and I'm a fan. Trust me, I am definitely a fan of. I'm a fan of Cardano, but it just seems to be getting weaker and weaker and weaker and weaker and weaker and weaker. Man, I don't know. I might, if it gets to $1, I might jump on some more. I might jump on a little bit more. El Salvador and Sailor aren't going to jump ship. I wouldn't think. No, I don't think so. I think actually more will come on board. I think you're going to hear Tim Cook and Apple next year saying they're going to have it on their balance sheet, and some other companies again will be adding Bitcoin and digital assets to their balance sheets. Plus, I do believe that the regulatory environment is going to come in, and I think it'll actually be favorable for crypto, at least offering clarity with regards to taxation and FDIC and SIPC insurance. All right, yeah, $1 million home in California. That's a one-bedroom condo. So what were some of the other questions? There was one on mining in here. Let me see if I can get the hash rate. Do you expect the rate announcement will affect the crypto market? That's a great question. I expect it to impact the market. I just don't know how. One part of my brain can come up with a bullish argument, and the other side can come up with a bearish argument. Bearish argument is the markets are going to start to sell off. People are going to be pulling their assets out to go to cash because they're fearful of a market correction, and that impacts crypto. The other side of it is, hey, we're going from a completely manipulated, almost fraudulent market, equities, and they'll pull that money out, and then they say, I need to pull that money to where? And then they go into crypto. So I don't know. I don't really know that. And again, Chris, I don't really follow the hash rate. I mean, I watch it. Generally, when you see spikes in hash rate, that means that Bitcoin's, or the prices of Bitcoin, because I generally think hash rate is tied to Bitcoin. When you have hash rate all-time highs, usually that equates to Bitcoin at all-time highs, because that means that more people are competing. And the more people are competing, that means that they're expecting to get more rate of return for their money. So more competition drives up the hash rate. More competition should, in theory, also drive up the price of Bitcoin. We saw that big fall in Bitcoin in price valuation was happening because all of a sudden hash rate just disappeared. So things cratered. So that's pretty much the extent of how I follow hash rate. Yeah. Oh, so I kind of got in it. Yep. Any idea how many symbols can be on the TradingView watches? I don't. I haven't run out of space yet, Mike. I've built up several spaces, so I'm starting to like it more. I like the way it's partitioned. So I have my top 7. I have some of the currencies I follow, and then my cryptocurrency section. I have interest rate products, and then I have commodities, metals, and then my sector ETFs I like to follow. So real simple to break apart. I have not hit a ceiling on it yet. No limit, at least for me anyway. All right, let's go to a couple more questions here because I want to wrap things up. Ethan says, can you talk about the engulfing pattern today on Apple? What does that signify? How should it be traded? Okay, well, you guys obviously know I'm a candlestick fan, so let's go look at Apple. First off, my answer is going to be I can't trade it because it's Apple, and I'm not allowed to trade Apple. Point number 2 is that is not an engulfing pattern, by the way. It's actually called a dark cloud cover. So here, I think, here's XLK. Yeah, this is an engulfing pattern. So you guys can see these last 2 candles. You have this green candle, and then it is fully engulfed, tails and everything, by the real body. So this red body eats everything that came before it, right, the day before. That's an engulfing pattern. Obviously, it's very bearish, and what most people or textbooks will tell you, you want to wait for it to break below the low of the engulfing candle itself, right? All right, fine. So you look at Apple, it's what's called a dark cloud cover. And a dark cloud cover, or at least the beginning... I love when you... How did all of a sudden I become a a site where everybody's trying to spam X-rated stuff on. That's kind of interesting. Anyway, dark cloud cover. In theory, what should happen? I wonder if this will let me do it. In theory, the next candle here would continue on. Let me make this a red candle. It's a highlighted box right now, but in theory, this should be a red candle. Okay. Oh, anyway, you guys get the idea. It's basically an engulfing pattern that takes 2 days to complete, right? That's generally what a dark cloud cover is. So right now, the body closes somewhere in the middle of the previous one. So how would I trade it? I would just kind of the same way, just waiting for it to break the low of today's candle. So today we have a low on Apple of 175.53. If we open up above that somewhere tomorrow and then start to break down, that's how I'd be trading it. So simple, easy answer there, Ethan. Hopefully that answered your question. Kevin, a newsletter I subscribed to recommended Allergen Therapeutics. I don't know that one, but I'll look at it. Back in November, I bought it at 1705. What do you do on a day on days like today? I'm losing a lot. Oh boy, this is not good. Allergen. And you bought back in November. I don't know exactly when, but basically if you bought in November, you're underwater. I don't know where. You bought up at 20 or you bought down here at 17. You know, for the most part, you got to ask yourself kind of why you bought Allergen. And I know you said a newsletter you subscribed to recommended it. Hey, you know, I'm all for newsletters for information, but you got to do your due diligence. If this chart was right here, and I'm going to go back to the beginning of November. If this chart was right here, is there anybody in here in this room that would have said, what do you think I would have told you? If anything, I'm looking for a shorting opportunity, right? Like I'd be looking for 24 as a short. This trend's down. This trend's real aggressive. First off, it's a therapeutic, which is drugs. I can't touch that anyway. That's outside of my list. But I'd be more bearish than bullish on anything on this one. So I'd love to, if you have time, send me what they wrote and told you why you should buy this one. Because I've got two blue lines here, which to me are great shorting opportunities. Oh, man. To the T. This thing literally closed that gap and just has fallen ever since. What do you do? I got to ask you, what was your initial plan, right? What was your logic behind it? Yeah, somebody told you to buy it, some newsletter or some, social influence, whoever the case may be. This, unfortunately, you're stuck in a real bad spot. And, the sad part is you're coming right down into demand. So it's at 14.11 right now. Demand's right around 13.40. Do you hold it? Yeah. I would probably hold it since you're already screwed now. Sorry, I mean that in a loving way. But that move today, my 21% drop intraday, ouch, 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 ouch. I'll put a little box or line down here at the bottom. If it gets below, let's call it $13, I think you're in a world of hurt. I know you're already in a world of hurt, but this is why you want to make sure you have stop losses in place. As you saw this thing trending down for most of November and December, why didn't we put a line down here at $17 and say, if it gets below 17, I'm out, right? I'm out. Well, you could have put that order in the system. Let's look at a 15-minute chart today and see when that would have told you to get out. Because sometimes it gaps. Yeah, so this thing was falling. You would have had a chance to get out. You could have gotten out of this today, and instead something, obviously clearly news-driven event. You can tell by the previous day's candle. So whatever the news was caused this thing to crater. But you would have been out somewhere in the 1670, 1690. This is why we always use stop losses. It's terrible. I agree, Ryan. Could have found a level on a higher time frame, or even just on the daily, right? You just got to come up with a level and say, all right, here's where I'm getting out. Unfortunately, when you have a lot of times these newsletters or subscriptions or picks that people give you, they don't give you the most important information. They don't give you, here's where you should get out. Because look, I've done this live for you guys many times where I've said, hey, here's something I'm looking to buy, and then here's where I'm looking to get out. That where you're getting out is, to me, more important than where you're getting in at. And I know that both of those things are needed to define your risk, but if you don't have a spot that you're getting out on, you're basically gambling. Yeah, and I hope, Kevin, you didn't put a lot of money in that one. You say you're losing a lot, and I know my comments probably don't comfort you much, but I would say I agree with some of the viewers here. If it gets below 13, you should probably just sell it. And again, the most important piece out of this is if you do take a big loss, learn from it. Understand that somebody told you to buy, and you probably didn't do enough research on it, right? And look at that price chart. Because if anybody told me to buy this stock that looked like this, sure, I get that the talk track here would be it's basing, It's now making higher highs, higher lows. Yes, it was trending down, but this could be the bottom, right? You're picking the bottom. And, okay, fine. But you got to tell yourself there's a certain point where I'm no longer going to be holding this. I will set a price point where I'm going to get out, and that's critical for success. Let's see. Yeah, diamond hands, right, Gallo? Got to have diamond hands. Oh, this is a really just ugly chart. Anyway, let's see. Don't have any more in here. It's the flannel shirts. Is that what it is? NVIDIA has a good double bottom. Oh, I like NVIDIA. Oh, by the way, I'm trying to get Larry on. Larry's supposed to be on here in the next, I think maybe next week. I'm trying to get him on before the end of the year. All right, so Jay says NVIDIA got a good double bottom. Yeah, you have a really aggressive double bottom, right? Now, my favorite pattern on this whole page is this hammer formation, which I couldn't have made a trade anyway because of how it gapped up. But yeah, again, and it goes right back to the same statement. Yes, I wouldn't mind buying NVIDIA at this 280 mark because the low of this candle on December 6th was 280.38, right? So I'm okay buying that one. But again, if it does break this, I have to have a line in the sand where I'm like, I'm out. So, if you buy it on those tails at 280, what's your out? Is it 278? Give you a couple dollars worth of wiggle room? All right, fine. Maybe I trade 100 shares of it. I have $200 worth of risk. Great. Because if it breaks this 280 or 278 mark, notice these unfilled gaps. I got an unfilled gap at 266. I got another big unfilled gap all the way down at 231. I love NVIDIA. I think what they're doing is awesome. They're dominant in their place. But does that mean they can't drop 30, 40, 50%? Nope, they certainly can. NJ wants to know for PayPal, PYPL. Ooh, again, this just looks real ugly. The only thing that I like about PayPal is how it's coming into these kind of areas of congestion from back in 2020, late 2020, which, might serve as a backstop. But the trend is aggressively strong and down on this one. So if you are thinking going long, you got to have your stop loss, somewhere around 178. To me, going long on this one's just real risky. If anything, I'd be looking for shorting opportunities, right? Again, that trend is your friend until the bend at the end. It's not that great. And I like PayPal. I use PayPal, but that doesn't mean really doesn't mean much when you're thinking of your portfolio, right? It's just my opinions about companies don't matter. It's what the people, the big money's thinking about them, and that's reflected by these longer term trends. Derek Zellick. All right, I'll bring him on. Yeah, last time I talked to him, he was living like living in Greece. Him and his family just went over to Greece and said, we're going to live here for 6 months. The beauty of being a trader. Derek is just a great guy. One of my favorites, actually. He's such a good person. All right, I think that will do it. Wait, I'm a quarter till. I'm sorry. Let me do one more because Vasile, I don't even know if you're still here, but you asked me about KHC. Here's your question. I even got it up there for you. How would you trade KHC tomorrow? From Vasile. If you're here, give a shout out because this one's for you. KHC. Kraft Heinz, right? Staple. If I look longer term, not the prettiest, right? Slowly drifting up, I would say. If you look at from this point here, you get this kind of slow move up. I'm not that excited about what I see here on Kraft Heinz's chart, honestly, but we can do the yellow box. And I would say if it breaks out of that range, of course now my box has changed. If it breaks out of this range, I would say that you go long on a breakout or you go short on a break below. Other than that, I'd leave it alone. I'd leave that all alone. All these ugly charts. How is the market so bullish? Yeah. I don't know. It's a great question, Shinobi. Personally, I think that what you have is a situation where and let's just think of myself as a retail, but also from an institutional perspective. I start off with, let's say, $10,000, right? And I bought a whole bunch of stocks back in 2009. Then all of a sudden, by 2020, my $10,000 has turned into like 30, right? Let's do the exact numbers just for fun. And way to extend the show, Shinobi. Thanks a lot. I had things to do, but now I got to go do an example. Son of a biscuit. Okay, so here is the trend line, and just so we can kind of gauge where we're at. All right, so you had a 405% gain, right? So now my $10,000 is worth $40,500. So I've got a mountain of paper profits, right, in theory. Then all of a sudden it corrects, and you freak out a little bit, but you're still holding because you're taught to hold for the long term. Then the market moves up again. So in all, my $10,000 investment in 2009 is worth $63,000, right? Awesome. However, in that process, I'm using margin. And because I now have, when I went from 10 to 20, I now have a lot more buying power. So what's been happening is my investment isn't just that 10,000 from 2009. I probably have put in another 10, 15, 20,000, who knows, because my portfolio is now worth 60 and I can get 2 to 1 overnight, I now have $90,000 invested in the market. So you see what happens here. I started off with 10, now I have 90 in the market. And if that thing pulls back, all of a sudden I'm leveraged. I've been adding in as it goes up. If that thing starts to fall quickly, I'm going to get margin called. And that, to me, is where the big crunch happens. And I think that that's institutionally. So right now, people aren't freaking out so bad. But if we get a nice knee-jerk reaction to, let's say, 10% in a day or two, you're going to see some margin calls on a lot of people's accounts because they've been leveraged up. They've been rolling up their positions to bigger and bigger ones using leverage. And to me, that's no problem, Shinobi. I love that you're participating in talk. You guys are great. Bah humbug. Yeah, the Santa Claus rally, statistically it happens all the time. Statistically, it happens all the time. But this year, Santa might not be knocking on the door. I think I even did a show called, why the Santa Claus rally is not going to be here. Or is it in jeopardy or something like that? I'll have to find that thumbnail. All right, guys, that's going to do it for me. Economic announcement-wise, there are a couple things to pay attention to. Tomorrow morning at 5:30 Eastern Standard Time, so 8:30 Pacific, you have the Producer Price Index numbers coming out. That's an important one to watch. There's two, right? There's PPI and Core PPI. Core PPI strips out food and energy, which is the most volatile. They're expecting that one to actually stay the same. So interesting that the core, when you take out food and energy, they're expecting that inflationary number to remain the same. But when you keep food and energy, they're expecting it to drop from 0.6 to 0.5. If we come out at 0.6 or 0.7, I think the market's going to take a dive tomorrow. But hey, play it by ear. Wait for that announcement. Of course, it'll happen before you're there. It'll happen before the market's even open. All right, everybody, that's going to do it for today. Again, for the newbies who just showed up, I would encourage you to click that subscribe button. If you are a regular, thank you for joining us for the show. And, of course, if you liked it, hit that thumbs up. If you have comments, questions, feedback, topics, let me know. Send them in at TraderMerlin@gmail.com. That said, thanks, everybody. Have a fantastic evening. I'll see you on our Tuesday show. Take care.